All right, Event Trader here. Sorry for the slight delay there, but wanted to make sure that we could get in and control charts and make this a little easier for people to follow along. Scott, you still there?
I am here, Gav. How are you?
All right, great. Yeah, no, and I also wanted to get the week ahead because I figured after we got done with the 13Fs, we could use that time to just take a quick peek at some of the earnings coming up, as there's a couple of names of interest for next week too.
Nobody reads that, Gav.
What's that?
Your week ahead.
I know, and then everybody asks me every day what's going on, and I'm like, well, it's in the week ahead, so.
I tell you, that's one thing about audio is that I definitely stopped reading your commentary, so I could, because you're talking about it on audio, I stopped reading a lot of your posts.
Yeah.
I'm sure you've done the same with me, right?
I stopped reading your stuff years ago.
All right, what do we got going here?
Okay, so obviously this is 13F piece. As a reminder, this is a little bit of dated information for people. So some of the names that you're going to see, you're going to be like, well, obviously people were buying this because it was rallying all through Q1. Now, these are the Q1 13Fs, and as a reminder, these need to get posted 45 days after the close of the quarter. So mid-May is obviously when we got this coming out. Mid-August it will be Q2. Mid-November is Q3, and then Q4 I believe is 60 to 90 days they have to file. So that's a little bit different, but I'd have to double check that. I could be getting that mixed up with earnings reports too. But the general idea behind this is just to get an idea of where some money was flowing in that quarter, and see if we can pick out any themes for where people are starting to get into. Obviously, taking a look at some of the charts too, with the idea being that this is bigger money that is not as likely to kind of trade as quickly as a retail investor. So you might be able to find a little bit stronger support in some of these names as they come back to key levels. Kind of want to take a look at where they were moving in Q1 to get an idea if, for instance, the stock rallied from $30 at the beginning of Q1 to $45, and then at some point over the period you see it roll back towards that 30 level. Might suggest a little bit stronger hands holding there. So we're just kind of going to go through and take a look at some of the names that were jumping out to us of interest. So if you want to follow along, you could always follow the 13Fs with the insider trading ticker, and that's ticker symbol INSID. And this is something that we post a lot for notable insider purchases on a daily basis as we go through different Form 4s that could suggest a CEO or the 10% owner or director that might have been buying and looking for any trends. But again, these 13Fs you'll see come out as a group right around the 15th of the month of May. So that's what we're going to be going through a lot of here, and just grabbing some of the names that are jumping off the page to us and reviewing the charts there and looking for some good plays. We were able to unearth STNE last quarter, which I don't think was a name that was on too many people's radars, and all of a sudden once Berkshire got involved, Warren Buffett of course, that really jumped onto a lot of radars. So Scott, do you want to just start kind of rolling through each one of these names, starting with we'll work in reverse chronicle order, and that could make it easier for people to follow along if you do a search for INSID and pull up the archives there, and maybe just pull out names on the new position and closed positions that could be of interest?
Yeah, that works. I mean, I also hit Command F, and then I type in 13F, and then it kind of narrows it right down to the funds. It highlights the funds that we're buying, so that's another way to track them. So, yeah, I'll let you take the lead on this one, Gav. Just so I'll follow you.
Yeah, okay. So we'll start off with Value Act here, posted at 17.15, and for a new position for them, they had PCG, which is of course of interest because this was the company that many thought might be going bankrupt. It fell all the way down to 6 right around those California wildfires, and has since been able to make a move back towards that 20 level, seeing a little bit of resistance at that gap from that gap down 24 area. But it is interesting, of course, when you see a big player like this jumping in. They had bought 1 million shares of PCG in the quarter, and when we're going back towards the quarter, that could have been a pretty nice little play at $6 million that's worth $19 million. So I wouldn't say that they're jumping all in, but definitely notable when you got a name that was close to bankruptcy like this, all of a sudden having a big fund moving into the position.
Yeah, I wonder if that was almost like a lottery ticket for him.
I would think so.
Because remember, this report, these filings come what? I think we said probably happened sometime mid-March. Was at some point or prior sometime. All these purchases or sales happen sometime in January, February, March, right?
Correct.
Yeah. So yeah, I mean, if you have you said 1 million shares, I mean, again, it seemed like a lottery ticket type of purchase to play the bounce. I'm sure they've sold out some of it.
Well, it's funny because one of the things that I was going through, it looked like there's also a lot of names, Scott, that we're going to cover, such as the Babas and Amazons, where people were just looking at a market condition completely oversold and jumping into some of the better names. That was one of the things that I was pointing at, that I was seeing. But yeah, I agree. This is probably a lottery ticket. Obviously the chart's in play here with 20 resistance, but I also think that there's a little bit more on the fundamental side. So for me, I'd want to know what the exact story is before I got involved with the name. But do you see anything that would get you interested from a technical trading side, Scott?
If you really want to get involved in it, you use 15 as your line in the sand. That's it. It's trading around 19 right now. It's definitely struggling. It's got its issues. So if you like buying these type of uncertain, higher risk positions, then I think you can take a stab at it. But if this thing can't hold $15 going forward, I would just head for the exits on that one. I don't like it.
All right, next up, we got Bloom Energy that they closed out from. I know this is one, I believe Commodity and Tech T have both been involved with it. Just seeing this, they would have closed out in March, so I'm assuming that rejection around the 200 is more than likely when they would have probably been moving to the sidelines there, been steady selling. It still hasn't been able to really find a ground here, but it is coming in as some key support at 11. Anything here that you like?
No, you know me. First of all, I think energy has just been out of favor year to date. It was really out of favor back in Q4, and as far as I'm concerned, this is one of those names that didn't make a great recovery in the first half of the year with the rest of the energy stocks. There's something wrong with the group. They're diverging from crude oil itself and natural gas names. It's going sideways here. I'm sure there's a value play here somewhere, obviously, with different people trading it and suggesting it's long, but the price action is suggesting that there's more distribution going on, so I don't particularly like it. When energy turns, that's going to be a whole different story. Eventually, when that cycle turns and energy's hot again, I'll keep this one on the back of my radar, remembering that, oh yeah, this is the one that everyone thought was really cheap at this level, and then I'll go visit it again. But right now, I don't like energy as a whole.
All right. Next up, we'll take a quick look at Treon Funds from Nelson Peltz. Only notable close here was the PNR, which is aquatic water system filtration. And, just taking a look at this chart, this thing broke down below 45 and has really just been selling off pretty aggressively throughout the course of this quarter. Now, see, this is an example of kind of one of the things that's dated about this, but what makes it interesting. So they closed out the position in Q1. Now the stock hit that 45 level at the beginning of Q2. Now what we could see is on the 8th, this thing broke down. Let me see if I can see what was behind it. My guess is
earnings, right? Probably.
And I mean, that would have been real early for an earnings. They reported earnings on the 17th. What I'm guessing is that there's some news about about Treon Fund not being able to push through. So they guided. So I'd be pretty interested if that Peltz knew that this was coming out and headed to the sidelines. But this is a perfect example of why this stock was able to drop so easily from 45 to 40, because Peltz had probably been selling this entire way up. And then all
Hmm.
of a sudden, a little bit of a trap door opens up. Now, this is looking back in hindsight, so it's 2020, but just an interesting move here in the name. Now, the stock's come down to this 35.50 level. I guess there's some support here on the daily, but I don't like this chart at all, Scott. Just looking at it on a weekly. Anything jumping out to you?
I think I might take a different view there, Gav. I think
Okay.
if they were buying this, if they were selling the stock out at the end of Q1, I assume it's because they made all the money on that run up off the December low. So what's to say they're not jumping back in it again down here at these levels?
Yeah.
So I think that's kind of the way I'm looking at it. I think if you like the name and you like the story here, you do have this $35, $36 area as your backstop right now, based upon the Q4 lows from last year, and that might be worth a try if you like the name. So
See, I guess my question for you would be, do you think Nelson Peltz is swing trading this? I mean,
uh,
they're more of an activist investor.
I don't particularly know his style, so I can't really.
Yeah,
Uh,
that would be the one question. I mean, I'm just if you do a search for PNR, you could see that they were unloading this. They had decreased their position by about 2/3 in Q4. So
mhm. Yeah, you know what? And they were decreasing their position. You're right. Back in November, I'm going back in the archives. They were decreasing in November as well as summer of last year. So
yeah,
yeah, so yeah, they've been unloading it for a while. It looks like.
yeah.
Uh, so
I
maybe not.
Yeah, we'll keep an eye on this one. All right, next up, we're going to move to Third Point. They put in a ton of, this is Dan Loeb's fund. They really entered a ton of new positions, just to name a few: UTX, BSX, MPC, Netflix, Microsoft, Sony. So here's one that I did want to touch upon, because this seemed to be a pretty common name that I was coming across. I saw something where I think it was one of the most widely held funds out there, and that was Celgene, or by hedge funds. That's Celgene, CELG.
They're getting bought out or merging, right?
I'm not sure on that.
Yeah, yeah, they're definitely being merged with somebody. You can
Let's,
tell from the price action that's been going on there. I just can't remember
yeah,
who.
I'll just do a quick peek on that.
Yeah, biotech is not my forte.
Yeah, yeah. There's so much action going on there. Um, I'm scrolling back. They're in the news a lot.
Yeah, it was Bristol Myers, wasn't it?
BMY was, yeah, BMY
Yeah.
Celgene received requests. Okay,
Yeah.
yeah. So a lot of names involved with there, but okay, we'll pass along in on that Celgene then. Um, moving on to what about Netflix, Scott? You got, I know you've been playing that a lot, and he's been heavily involved there.
Yeah, you know, this has actually been holding up pretty good here the last couple of months, above the 200-day moving averages, above that 340 mark. I've been mostly a buyer of it on dips down to support levels when it comes off the support, and I think it's okay right now. Obviously, the market the last few sessions here in May is very sketchy right now. We've got some corrective actions in the major indices back below the 50-day moving averages. A lot of sectors under rotating going around there, but Netflix is holding up okay for now. I don't have any particular insight of whether I want to be long or short it. I'm just watching it closely though.
Okay,
So.
then UTX, that was an area of interest for me around the timing of the earnings, because we kept seeing a lot of strong reports coming from this aerospace defense area, and really couldn't find a bid. Now, obviously, they had been buying. They probably saw a lot of value there down in the low 100s, and the stock was able to roll to 144. But since then, we haven't been able to see it really hold gains. So now it's coming in to test pretty key support at this 200-day moving average. You got any thoughts on that?
Yeah, I think that's a key inflection point, somewhere around 127, 130. If you go back the last like 9 months or so on the chart, you can pretty much draw a line, and buyers are pretty much defending the stock above 127, 130, and then sellers are basically in control. But overall, this has been a really good performer in the industrial space, and I think it holds up okay here above that 200-day moving average.
Okay. Next up, I want to take a look at some of the closed positions, and there are two of the healthcare names, Scott, that we know we're getting beat up in the quarter. The first one is Merck, MRK, which since the start, one of the things I'd been talking a while and took that long in UNH, I just thought that the space was way overdone. Carmine and I did that piece on a little bit of an oversold reaction around concerns around the Medicare for all, and that UNH long has been working out, got in about 235, took some profits at 250, and just seeing this Merck, and you could see the selling going on up until it was rallying throughout most of Q1, and then all of a sudden at the beginning of Q2 is when it rolled over. Now this closed position would have come in Q1, but it just goes again to suggest that there was a little bit of weakness and a little to this last ditch rally in the name going into the end of the quarter. Now we have seen it bounce back a little bit here in Q2. You got any interest in MRK here, Scott?
Well, first of all, that mid-April drop was the whole healthcare sector got whacked because of the pricing stuff that's going on there, above the pricing of drugs. So we saw the healthcare providers take a nosedive during mid-April as well. Interestingly enough, though, Merck did actually hold on to that 200-day moving average, which has been on the rise for about a year now, and I think that's a very constructive signal, and I think the stock is okay above the 200-day moving averages. So if you like the name, I'm pretty sure the dividend is stable. If I recall, this is one that's been around forever. It pays approximately, what's that yield? Let's see. The yield is about 2.75%. I think this is one to, if you really like it and you're looking to get on board, it's okay above the 200-day moving averages and the April low. So somewhere in that 72 to 75 vicinity.
We also got Cigna here, CI, which was a position at the closed. This is one that has been steadily sinking lower. We haven't seen any it had that bounce back attempt in the beginning of May, but rolling back over and coming back in, that 145 area is definitely going to be key for it to hold. Got to pop out to a weekly in order to start looking for more definitive levels, and if we get through 145, perhaps that 130 to 135 area might provide a little bit more strength, but I'd be a little cautious on this one, Scott.
Yeah, for sure. If you compare it to the IHF Indigo Harry Frank, which is the healthcare provider ETF, Cigna is definitely the clear laggard in that space right now. And I would pretty much just avoid this one. It's got something to prove here in that multi-month downtrend off those December highs. So, yeah, that's an avoid for me.
All right, and then in third point, there's three positions that they decreased that I found pretty interesting. The first one I wanted to point out was American Express, because this is one that I felt it didn't have the greatest earnings and was expecting to see it roll over, but instead we've seen it break out to new not sure it's all-time highs.
I think that is.
Yeah, so new all-time highs. So curious, they cut their position in half to approximately 1.5 million shares from approximately 2.9 million. But interesting move in the name here. But when we're talking about, and I wouldn't say that this was on a lot of hedge fund decreased positions, but when we talk about areas where you could see a little bit of trapdoor action and stuff, I think AXP could fall into that. But this chart's just been so strong that until we see some things break, it's tough to get shorted, I would say.
Oh yeah, as always, especially at all-time highs. All-time highs. Who who is losing? Nobody.
Yeah.
It's really just a matter of profit taking on into everyone that's buying it up. So no resistance, no nothing. It's very difficult to pick tops off of new all-time highs. I'm surprised they actually sold it, to be honest with you.
Yeah.
But oh well.
Well, I could assume why. I mean, I know that there's been some revenue growth issues there at AXP, which they missed in this quarter, which is why I was expecting a rollover. But obviously, the strong job market as people continue to look at consumers. The other that they unloaded was PayPal, where they cut it off. I mean, they just banked the quarter position here. Not surprising given that strong run-up that we saw in Q1. So, I mean, this is another one that looks really strong to me.
Yeah, I mean, without a doubt. I mean, this is in the software space. It's had one heck of a last 4 or 5 months debut to the start of this year. I like it a lot. If this thing even pulls back slightly to that 50-day moving average around the May low at 105, 106, 107, that's going to be. It should be bought up, I think, for a nice bounce there. It's looking great. Yeah.
And then the last time I want to touch upon them is another payment processor that was on a lot of hedge fund lists here. That's WorldPay, WP. Look at this chart.
Yeah,
Scott.
another monster. Yeah. It sounds like Third Point's jumping ship ahead of these stocks making their big moves.
Yeah. Yeah.
You know?
I mean, I guess maybe a little bit of profit taking along the way up just to lock in a little.
Yeah, decreasing their position size. So, yeah, I would if I worked for them, I would tell them to be riding the trends a little bit better than what they're doing. But again, I don't have that much capital put to work, so you got to do what you got to do. But yeah, they're interesting to see that they're decreasing positions in very strong uptrends. So.
Yeah, so we'll keep an eye on those names. Moving along, we're going to take a quick peek at Elliott Management, Paul Singer. One of the more interesting ads I thought from them was Semantic, SYMC, because that was a name that got beat up pretty good post-earnings, but it's been able to hold this 18 level, and you got to figure a big name like that involved really we've seen it bounce off that 1760 to 18 area, we'll call it, Scott, and coming back nice here. So this is one that could be a little bit of a value play for some people.
Yeah, possibly. I mean, when it comes to, this is a software security, right? Like
Yeah.
Norton antivirus and stuff. Yeah, when these, sorry, Gav, when you look at the other names in the group, and I like to watch the Hack ETF, that's HACK, Hack, and it's basically a cybersecurity ETF. That has just been much better performance over the last couple of months. It's pulled back in a little bit here in May, but Semantic is definitely what I would call probably the laggard in the group. If you look at that chart over the last year or so, just kind of chopping it between $18 and $24. So I think there's better plays out there that are in stronger uptrends. But like you said, there is a pretty decent looking floor there at $18. So maybe if there's some value there, it could be worth a try as long as it stays above that multi-month 52-week lows around $18.
Okay, and I wanted to take a look at SAP. I hadn't looked in this name in a while. Obviously a German software play, and this one's just been real strong. You got any thoughts on SAP up here, Scott?
SAP software, yeah, real strong.
That monthly looks lovely.
It looks fantastic, and I'm going to say I think that's new all-time highs as well for this one. Yeah, it is. And then you had that earnings gap that looks like from late April. It did undercut it a little bit 2 weeks ago, but it pretty much held in there right off that 122, 125 zone, and still holding up pretty strong here. So definitely a name that I like a lot based upon the recent price action in context of broader market weakness here in May.
And then some of the notable closed positions, Scott. You were talking about the weakness in XLE, and RIG and XOM are two of the positions that they closed out this quarter.
It's energy. I'm telling you, and I've said this before, when you have your ETFs below the 200-day moving average, below the 50-day moving averages, below 20-day moving averages, and you're not seeing, and you could basically draw a downtrend line on any of these stocks, they're just out of favor. It's not to say that there's not value there, but they're just not performing. And when it comes to the market, it's so, especially big funds and whatnot, it's always about the performance and beating the benchmarks. And if the stocks aren't doing it and the sector's not doing it, you got to convince your clients that you're a value investor for the long haul. And I don't know how long they're going to be waiting around when other people are riding trends higher. So, yeah, I don't like any of these energy stocks, not now.
Okay. Next, we're going to move in and take a look at Paulson and Company. This is John Paulson, famous for shorting the houses and usually a gold bug too. And as we can see in his new positions, gold, the miner, was one of the key new positions. Another sell gene ads, so obviously a lot of these hedge funds knew something was going on. And here's the name that I like the most out of all the tickers that I saw, Scott. Centene, CNC. There was some takeout chatter about them earlier, and I noticed the number of these hedge funds seem to be getting into it.
Remind me what they do.
It's a healthcare.
It is healthcare. Yep.
Let me see exactly. It was just sticking out for me from
it's a healthcare plan. It's a provider.
Yeah. So healthcare provider. So this is the name that I like for a breakout candidate here. And if there was any of the ones that I was looking at from this that I was interested in playing, it was CNC. I'm probably going to add a position in it. I like the way it's breaking out of that downward trend and all this activity I'm seeing in the 13F. We just saw that Wall Street Journal story shortly, about 20-30 minutes ago. I don't know, it just seems like something's up there, and I'd be curious to take a little bit of a flyer on it.
Yeah, I mean, you nailed UNH over the last 2 weeks, so for nice gains of about, what, $15 you caught in that?
Yeah.
So you're definitely seeing something in that healthcare provider space, some sort of potential turnaround here. So Centene, if you like it, I think, yeah, why not? It's holding up okay here in May, and all it has to do is clear $58. And you could have a nice run back up to the 200-day simple moving average around 63. So, yeah, it looks pretty good there.
Yeah, and to be clear, I'm not one that likes to invest on hope, so I usually don't play something with the idea that it could get taken out, but I do like this chart breaking out its downward trend, and I do like the smart money that seems to be floating in there. So definitely.
Yeah, sorry to cut you off there, Gab, but just looking at some of the numbers here, it's a profitable company, obviously, but
Sure.
Look at that price to sales ratio, 0.35. So there's definitely some value down there in this name.
Trading at 11
cheap.
times forward PE.
Yeah, this is a cheap name down here. It's been growing its sales and bottom line, so quarter to quarter, year per year. So this definitely a good name down here. I like this one. I'm gonna have to take a little bit closer look at this one over the weekend myself.
Okay.
No dividend though. No dividend.
No dividend. Yeah. So some of the closed positions for Mr. Paulson, ODP, that'd probably be one that I'd be curious about, just because they announced that relationship with
Office Depot.
Baba. Yeah, but obviously it looks like everybody's closing out on that position there. And then none of the other ones are really sticking out too much to me from Paulson. Anything on that Paulson one sticking out to you, Scott?
I didn't even know Office Depot is still around.
Yeah.
I can't remember the last time I stepped in a Staples. Are they around still? I don't even know. Staples, yeah. Office Depot. Yeah, those are. I would not touch any of these names here, but as for Paulson and his picks there, yeah, nothing too crazy. You got to understand me too. As a technician, if I see a lot of these names in downtrends, I can automatically tell whether the fund is going to be a value type of fund, and if they are in uptrends, I can tell that they're more of a growth-oriented type of person. Me particularly, I am more of a growth oriented investor and trader, unless there's some convincing fact, and I'm getting paid with a nice dividend yield to be buying downtrends. But nothing really jumped out for me when I looked at Paulson's.
All right.
Lose you, Gav?
No, I thought you were going to talk for a little second longer there. Next up, we'll take a look at Baupost and another Celgene buyer here, but Bristol Myers, that was a name that I was seeing a little bit about. Trying to find a bottom down in this 45 area. Can't say that I've been convinced that they've done it, but it does look a little bit more interesting at this level.
Yeah, like we said, it's got something to do. It looks like it's something to do with Celgene as well. So I don't really have too much of an opinion there. What's the yield on Bristol Myers these days?
We're looking 3.47, so well above what a Treasury's paying, and forward PE at 10 times. So that's the name that I'd be looking at if you're looking at for some value in some of these drug plays.
Yeah, some diversification. Get a big drug company. Yeah, it's okay.
All right. Next up, we're going to move on to Mr. Buffett, and this is one of the prime examples of some of the biggest holdings in hedge funds for the quarter. Included what you'd expect to see: Amazon, Microsoft, Facebook, Google, Alibaba. They were the top 5 holdings on the list. And if you're curious, the largest increases in Q1 on the list: Walt Disney. One that I had added, Celgene, WorldPay, and another one that I didn't know the ticker, but and I'm probably going to butcher the name of it, IQVIA Holdings, IQV.
What's it? IQV?
Yeah.
Yeah, good. IQVIA. I don't know.
Yeah, so anyway, we'll circle back to that, but keeping on, because that IQV was another one. WP, IQV, and CNC were the 3 most interesting tickers I saw from the CNC being the big one. But going back to Berkshire, obviously the Amazon entry, I mean, don't really have a lot more to add. I think he addressed this in depth on CNBC. But Scott, while we're here, what's your thought on Amazon at the moment from the chart perspective?
Just ping pong and pure around 1800, 1900 the last 2 weeks or so. It's okay above 1800 for now. If I had to say there's a line in the sand, it's a little lower down near the 200-day moving averages, right around the mid 1700 area. So it does have this potential to sink and break lower. But again, I think that would be more market-related, some sort of geopolitical headline that would take it down, as opposed to some sort of individual, just a heavy seller in the name. But overall, I think if that is the case, I do suspect they would try to find support mid-1700s, maybe even 1700 itself, and then bounce back a little bit. So. That's really it. I do like it. It's Amazon. I think it's a fantastic trading vehicle. So I think it's tough to invest in such names at this juncture, because it's a heavyweight in a lot of indices, and it usually goes through more of a churning process when they reach that upper echelon of market cap weighting and indices and whatnot. So.
All right. The other increased positions in the Berkshire portfolio. Obviously, they were going for some of these names that had gotten beat up in Q4, and that would be J.P. Morgan, Delta, Red Hat, and PNC. Then on the decreased position side, one name that kept jumping out to me that I was seeing mentioned for a lot on the selling and decreased position, Wells Fargo, WFC, and that has me a little bit concerned that this could be a value trap down here, because it did seem like there was a lot of people moving out from the name, coming into some pretty key weekly support levels here, and just taking a look at that monthly chart, Scott, this doesn't look too pretty.
That's true, but it wasn't Wells Fargo, though, one of the companies that Buffett got like a huge discount to back during the crisis in 2018?
Yeah,
2008, 2000, 2009. He got like a huge warrants or something like that.
Some warrants. Yeah, I mean Goldman was the big winner that he hit. Wells Fargo,
Oh
I'm
yeah.
not sure exactly when it
Okay.
was. Goldman was the one that he just made an absolute killing on.
He got like a huge discount, like 40% cheaper than where it was, or something like that.
Exactly.
But then I think Wells Fargo was the one that he also was a pretty big proponent on. So I mean, here we are 10 years later. I mean, I'm not too surprised that the guy's reducing some of his exposure to it. But overall, I mean, it is a laggard, believe it or not. WFC. If you compare it to other
That's
financial
believable
names,
given the amount of political issues that they've run into.
they were the ones with those supposed fake accounts and stuff like that.
Fake accounts and just pushing mortgage
Yeah.
sales on consumers. So, and right now they're just capped with the amount of business that they could do by the government. So,
Yeah. Well, it fits that bill of it as not institutional favorite because it is trading below the 200-day moving averages for the last 9 months. It's trading below the 50-day moving averages multiple times here over the 9 months, and it's sitting pretty much back near 52-week lows. So yeah, I would kind of avoid this one until something changes the tide here in this one.
okay, moving along, we're going to take a look at Greenlight Capital. David Einhorn, of course, his big ad was TGP, which is TK Partners. Obviously a marine transportation company in the liquefied natural gas field. I'd be curious at what kind of exposure that they would have to China. That would probably be my biggest question for him. Pretty nice dividend here, Scott, though, at 5.45%. Really cheap and seems to have some pretty nice support down at that psychological 10 level.
Yeah, it's been doing okay so far this year. It's trying to do something with this 50-day, 200-day moving average in the $14 to $15 area. If it starts to move higher and gets back up through the 15s, I think that could be a really nice investment over the next couple months. But right now, it's at what I would call a key inflection point, right in this $14 to $15 area. And I just watched this one. This is one that I would just basically set an alert on, or maybe write down a little note, or maybe even if you really like the name and you like the yield and whatnot, you get a starter position out there, and then you just keep your starter position there, and then you wait until it starts ripping through the $15 area, and then you can jump on board and add some more to the upside. But yeah, I'd watch this one on the radar. I like it.
All right. And then two positions that he got rid of. We'll take a quick peek at it. Shutterfly, which is always a popular name here. That one's trying to find some support at the 36 level, and Dillard's, which obviously we've seen those department stores really get hammered. And again, you can kind of see what happens when when we start seeing these closed positions. It really tends to open up for a potential gap down. But let's concentrate on Dillard's here, Scott. You liking this support level here around this 56 area?
This is an extremely thin stock. I think I've traded twice in my 20 years, and let me check the float here. Yeah, it's 14 million shares on the float for DDS, and the short interest is always through the roof. And here it is. I have a last reading of about 45%, 40%. So this is one of these stocks where you can trade it. It just squeezes typically on an earnings report. It's wild. I think I see the support level you're talking about down here at 55, but I just know that this stock can easily gap and go and move significantly in either direction on any day of the week. So it's an avoid for me for that reason, just because of the makeup of the stock. 14 million shares and a 40% float. It's a wild one. So
and again, when you have a big name like Einhorn stepping out, that definitely opens up that trap door a little.
yeah.
Next up, we got Bill Ackman's Pershing Square, and I'm just noting this again because there's another person that was buying UTX.
Yeah. So that.
All right, moving on to George Soros and the Soros Fund. He was a pretty busy beaver in Q1, adding a lot of names. Two names that were jumping out to me that we could take a quick look at, Scott. Well, number one, another one in that WP. And the other two well, let's go three names because these are all names that you've been involved with. We got Lyft, but only about 200,000 shares, so he was only kind of nibbling at that. Etsy, another small ad, and Twilio, TWLO, of course. The Etsy one was one that I was trying to short post earnings, but it held up pretty well. So I guess it'd be, we've heard your thoughts on Twilio and Lyft. I don't know if you have anything to add, Scott, but I was curious as to your thinking on Etsy right here.
I can't deny the fact that this stock has been so strong over the last 2 years. It's clearly amongst the growth names. I believe it was on our liquid momentum focus list for once or twice here. The volume is just under a million shares, so sometimes it makes it, sometimes it doesn't. It's definitely been on the GrowX, our emerging growth focus list over the last 2 years. It's a fantastic growth stock. I don't even know what they do, to tell you the truth.
Etsy?
Yeah.
Technically, they don't do much of anything, but so what they do is they have a bunch of vendors.
It's the Seinfeld of stocks.
Yeah, more or less. No, but what they do is they have people that are selling products on their website, and then they take a override more or less on that. I was talking with Rob Reed a lot about it. He's a big fan of the name, and what they did recently was they upped the ante on the amount of percentage that they take. I think it went from like 3.5% to 5% on what they get from each vendor. And there's some concern that perhaps they were overreaching it, but they've really seen their bottom line improve from that, their EBITDA take a boost. So that's been one of the big reasons why it's been able to push up higher here.
Yeah. Again, trend is your friend. I don't know what else to say about this. This is a leading growth name over the last 2 years, and it's just been making its way 45-degree angle, riding above the 200-day moving average. I think it's okay above that 200-day moving average, which comes in play around 54, 55. It's pretty awesome of a name, despite the fact they do absolutely nothing.
They're kind of like a shakedown artist, more or less, where they're just
I like my Seinfeld of stocks. It's a show about nothing.
There you go.
It's a stock about nothing.
There you go. Yeah. Robert Reed would take umbrage with that, though, so you'll have to take that up with him. And then just some of the closed positions of note, AT&T, Verizon, and CF, which obviously we've seen some weakness in that farming industry. KHC, to Kraft Heinz.
Let's take a look at
that. You want to take a look at that?
KHC, I mean, talk about a name that's
I
a staple.
wanted to buy it. And
so do I.
It looks like L Brands to me.
This is where I just went back and I just mentioned this a little while ago. The only way I buy a name that's in a significant downtrend, and if you want to see the definition or textbook of a downtrend, take a look at a 2-year chart of KHC, Kraft Heinz, and if you don't see the downtrend there, then I don't know what to tell you. This is value trap galore right now. And I don't know. It's crazy. Like you said, you want to buy it because it's a household name, and it's been around for years. And are they still paying the dividend, or they didn't cut it, did they? Yeah, they're still paying a pretty fat dividend, right?
Yeah, I mean, they got to cut that soon.
Eventually, it's 5%, right? Yeah.
Yeah.
So it's just...
Well, I mean, it'll be interesting because, I mean, obviously it's accounting irregularities that really hit this name. So
I always heard it. Is Buffett still in this one?
Yeah, he was holding on. I think that it showed a maintained position in that. Yeah, they maintained their position at approximately 325 million shares.
Oh, that's gonna hurt.
Yeah, yeah.
Unless you're Warren Buffett.
Yeah, exactly. And he actually addressed that too. So.
Yeah.
But there's things for the long run. So
yeah, that's a name that eventually one day will turn around, but I'm not. Again, I'm not going to be the first ones diving into massive.
First, right?
Yeah, exactly.
Okay. looking at Glenview Capital, which is Larry Robbins and Mark Horowitz. A couple of names that we've already been talking about here. WP, they took a new position in. Centene, CNC, and the company that Centene's looking at buying, Wellcare Group, WCG. They entered into all those positions there. So just keeping along that theme. And then closed positions. One of the more interesting ones, because we've been talking a lot about that transportation index, FedEx. They closed out from there. Scott, FedEx is one that you've played in the past.
Yeah, yeah.
It's back down to those December levels, which I believe was one of the names you were buying hand over fist on December 26th. Am I wrong there?
No, it was this and UPS. I was a big fan of this going into I think it was December 24th, right before Christmas.
Right. So
I was scaling into it down below that breakdown on towards December 20th or 19th or something like that.
the
market
still
was
feeling his chesty with it at these levels?
Now I'm out of that position. Obviously, I mean it rallied back in the Q1, and then it rolled back underneath that support at 170, which is where that gap was. So I'm out of that. This fits that bill of not being an institutional favorite, below the 50s, below the 200, just trending lower, making fresh multi-month lows. They're out of favor, and I don't know whether it's because Amazon and its whole, creation of its own fleet. Yeah, I'm sure it's a big factor. But even look at UPS, another one that's really struggling to, make any headwinds to the upside here. So there's definitely some issues going on in FedEx and UPS. So I forget, did you say that they were increasing their position or decreasing it?
It took. They were closing it.
Yeah, it's just not working.
Yeah.
When it's not working, you got to eventually throw in the towel and and move on to something that is. So yeah, it's like I said, it's FedEx, and I've watched it down here because IYT was the transportation ETF, and as we stated earlier this week, it was falling out of a bear flag pattern and gap down yesterday and under pressure again today. And FedEx is a big culprit. It's a big heavyweight in the IYT, so I am watching that one. I just don't see any reason to get involved on the long side just yet. Maybe if it cracks 150.
Okay. Next one up that we're going to talk. Well, first let's take a look at Carl Icahn, who, if you believe the rumor mongers, owns every stock in the in the world. But Caesar Entertainment, CZR, new position in there. That makes it interesting to me because he certainly seems to have the presidency here, so makes me think that he knows something. You're looking at it on that weekly. If it could get back above 9 and move into that 10 level, this is a name that really gets interesting here.
Yeah, let's see. I'm just curious to know, I'm looking up real quick, what other casinos Caesars owns besides Caesars. Do you know off the top of your head by any chance?
I don't know. That would be a question for Carmine.
So they own Harrah's, it looks like. Harrah's, Caesars. They have like different, obviously it's global. They have different areas like in Dubai and whatnot. Planet Hollywood, they looks like they own Bally's, Rio, Paris, Las Vegas, Harrah's. They got some decent names. The Horseshoe, Flamingo. I can go on and on here, and you can check it out. But yeah, they own. It looks like they own plenty of names that older school brand names. When you think older Vegas. But anyway, this stock. When I look at I have three casino stocks that I always look at: Wynn Resorts, LVS, Las Vegas Sands, and MGM. They just seem to have better movement, better liquidity, better responses to data, technicals, etc. Caesars has always fallen off my list. A, because it's just too low priced. I don't watch very low priced stocks. And then B, it just doesn't move well. So I don't know. Good for Uncle Carl if he's going after this one. So.
All right. Next up, we got to mention Appaloosa, David Tepper. There was, of course, a story out in the Wall Street Journal that he'd be looking to close his fund and run it as a family office. So all these new positions, increased positions, they you obviously saw a lot of value out there adding Baba, CRM, Amazon, Adobe throughout the quarter, but highly recommend just taking a look at all these positions here because if they do close it and he returns money to investors, I'm not sure how does that work, Scott. Do they have to liquefy all these positions?
Yeah, I would imagine so.
I would think so, right?
Yeah.
So, you want to keep an eye out on the names. Increased his position in PCG, Facebook, Micron. So, something to look out for there. I'd highly recommend checking out all these positions and just kind of keeping in mind which ones they have there.
Yeah. He did pick up PCG. Another person that picked up
Yep.
PCG
Increased
increased it during Q1's correction.
Yeah, so
So,
some nice winners there for people. Taking
yeah.
a look at Corvex Management, two names that they closed out. I mean, they added a bunch of names, another Celgene and Amazon ad, a Take-Two ad too, which is of interest. But it's the two closed positions here in ServiceNow and MDB that are of interest to me, Scott. Obviously, we've been talking a lot about these cloud software names, and I didn't see too active of a position for people, but it's something we want to continue to monitor as we talk about that trapdoor and a quick fall if we continue to see these hedge funds moving to the sidelines on these names.
Yeah, ServiceNow is probably one of the strongest software names that have been out there. Just still holding up like a champ here the last couple of weeks as the broader market goes through a massive sell-off. So I guess they're just decreasing it. If they've been holding on to it from that February earnings gap, or they even bought into it, they're sitting with some pretty gains. So not too surprising if they cut it out there. I mean, they had well over a 20% gain just in the last 3 months, and if they had it before January, they're looking at almost a 40% gain. So. Yeah, it's strong. It's still strong, so I wouldn't be so bearish on that one. And then the other one, Gav, was
MDB, MongoDB.
yeah, this is the database one
Yeah.
for all like the online streaming games and stuff, particularly Fortnite and stuff. Yeah, I mean, this is a growth name on our emerging growth focus list for the last year or so. It's just a phenomenal growth story, I think, and it's got that nice strong uptrend. It definitely looks a little far ahead of itself, but if you go back to the March gap that comes in play around 120, 125, that's going to be your line in the sand. You got the 50-day moving average on the rise too, around 133. Overall, I mean, I think it looks pretty good above the March gap. If it starts cracking down underneath there, then you can look maybe for further downside. But overall, just seems like a fantastic growth story out there with the cloud, cloud database. Help me out there, Gav. I can't remember the exact model.
For MDB.
Mongo, yeah.
Um,
What do you expect? What's the actual niche that they're in? I can't remember that.
Cloud software space, big data.
Big data, yeah. Big data flow. When is earnings for them? That's going to be a key thing, too. I think it's coming up soon. June 5th. So you got 2 weeks. 2 weeks, MDB is going to be pretty interesting, whether it can stay above that 120, 125 gap support area.
All right.
So.
Next up, just a quick look at Starboard Value. The increased position SYMC Semantic, which we had talked about earlier. That was one of the things sticking out to me. But outside of that, nothing was really jumping off the page. Cerner, of course, but that news had been well known. So,
well, there was another Semantic. They increased their size on SYMC.
Yeah,
is that what you just said?
Yeah, that's what I said. Yeah.
Oh, sorry. Okay.
Yeah,
all right,
yeah. That was the one thing that jumped out to me. So, next up, we'll take a look at Duquesne, Stanley, Druckenmiller, another busy beaver in the quarter, adding GE. They got into Qualcomm, Snap, Micron, Nokia, Facebook. So added a lot of names here in terms of closed positions. Closed out of Salesforce, AAL, and Kohl's, KSS. So as you can see, there was a lot of people closing out those positions. in the department stores ahead of this earnings season.
Yeah, I'm a fan, of Drunken Miller. He's one of the market wizards. I read that story years ago. I think he was he was George Soros's prodigy, right?
Yeah.
And yeah, I mean, every time I look at his 13F filings, they're always names that not only do I know, but I use, and I'm always like, wow, this is the same type of stocks that I go trading most of the time. So
Yeah.
I feel like he's very close to my wheelhouse. I have no opinion on GE though. I don't know about you, but from what I've heard from you guys talking, and I look at the chart, whether the company's going to survive or get broken up or whatever, I think it's just dead money to put it into as an investment.
Yeah, and
So.
that's basically how I've looked at it. Until I see a little bit more of a turnaround on the operations side, I'm not in any rush to get in here. Still have a lot of work to be done on selling off units, so I want to see that get done before I get too involved.
Yeah, I'm a little surprised it
And
closed
then
down.
he's got Nokia, which it's name
That's
I've been getting beat up on, but I still like a 5G play. That's been getting hit more on just how slow Europe's been than anything else.
Right, right. I'm a little surprised that he dumped Salesforce,
Yeah,
CRM.
yeah, that was the one thing sticking out, but I can't say that I saw that as a move that a lot of people were doing, but I did see that he increased his BABA position, and that seemed to be a pretty popular move for some of these hedge funds in the quarter.
Yeah, we'll see. Yeah,
So
cool.
next up, quick look at Tiger. Another new position. This one in Twilio at RNG, um, which is another one of those video surveillance cameras, right?
hmm
EGHT, another cloud name. So Tiger is definitely involved in the cloud space. And the one thing that I wanted to point out, and this is why it's kind of interesting to take a look at these Autodesk, ADSK, and we were talking about how that chart was looking a little weak and the importance of them needing to beat earnings. And again, you see when these closed positions come out and negative news comes out, they tend to be a little bit more ripe for those gap downs or even gap ups for that matter if they were adding to the position. But look at that Autodesk today just diving into the 200-day moving average.
Yeah, yeah. So Autodesk, it's a broken chart right now. Disappointing earnings reaction takes it back underneath the 50-day moving average for the first time in about 5 months, undercutting support at that 165 area. So just kind of an avoid for me right now. A name that did. A couple names here in Tiger Global that stood out to me was 8x8 EGHT. This is a name that I believe is on GrowX, and I've heard Rob Reed talk about this for like 20 years. It feels
Yeah.
like, but it's a definitely a choppy name, but it's bigger picture. If you have the patience, it's acting really, really well, and I think it's still.
I think it's notable too, Scott, that it got hit on its earnings and it's bounced right back up to edge up to that 24 area.
Yeah, I wouldn't be chasing it here because the stock does go through some sort of corrective phases. But if you take a look at a monthly time frame of EGHT, it's got just a nice steady 45-degree angle to the upside there over the last 8 years, and it's trading at fresh multi-year highs. It's been around. I remember this one being around since the internet bubble. So yeah, it's looking pretty good. And like I said, if Rob likes it, he's more of the growth-oriented hybrid value investor, and this definitely fits the bill for EGHT. The other one that stood out to me was the ones that he decreased positions in, and I have to bring this up because Spotify, SPOT.
Yeah.
So I'm short
Still
this one.
shorted, right? Yeah.
Yeah, I caught a nice gain in that, about 10 points over the last 2 days, as it finally broke down there. And again, that fits the bill of a stock that's just underperforming, below the 200-day moving averages for the last, was that 4 or 5 months, below the 50-day moving averages for the last couple of weeks. And it just seems like the path of least resistance is to the downside. And then obviously you can always just look at a 13F filing and say, there's other major funds that are also bailing out on this thing. So when it breaks under support, you can just take a short there knowing there's not going to be anybody buying. Well, not necessarily, but you know what I'm saying.
Yeah.
So.
And again, Redfin. I mean.
Was that another one?
RDFN. It's another name that they stepped to the side, and then you just see it gap. So, obviously, Scott and I are going to be trying to do these 13Fs on a more timely basis going forward, but I think it's going to be really key to keeping an eye out on names that have had closed positions that got upcoming earnings. Because as you can tell, there's a lot of gap in moves on that when you see that big money step to the sidelines ahead of an earnings report.
Yeah. It's funny. He threw EBs in there too. That Eventbrite.
Yeah. I saw that because I was like, oh, he's got STNE, and then I was like, yeah, but he's also got EB.
Yeah,
that's the smart move and the dumb move.
Yeah, if I had to guess, I would say that the next 13F filing that comes out this summer is going to have Tiger Global closing out their position in EB based upon that gap down there. I can't imagine there's still. I can't imagine that it says maintain positions, and something tells me the next one you're down 30%. You're going to be exiting. So I don't know. Yeah. But all right, what else, Gav?
Then let's jump over to Viking Global here. They're pretty busy too, adding JD, Activision, ATVI, NXP,
another guy.
Micron, Nvidia they added. So number of ads here: Booking, BKNG, and Burlington. So this is a pretty busy company. Here's another one though that did close out, and this is what I wanted to take a look at: CRM, which I'm surprised because I really like this name, but it does seem like we're seeing a couple of people closing out here. So it's going to be a name that we're going to want to keep an eye out on.
Less resistance to go higher, right?
Yeah, exactly.
Well, again, it's interesting to see people closing out, but the stocks aren't breaking down. So CRM definitely has a key support, 150 area. You got the 200-day moving average on the rise there around 149 to go up and meet that 150 support from the last couple of months. So that's going to be a line in the sand going forward right now. But it's not too far from all-time highs there at 160. What is that? 166. Yeah. So it's within 10% of all-time highs. If there is another turnaround in the market here, and do we see the market go higher, software stocks still look pretty strong, and I suspect that CRM might be one to keep on the radar to continue into higher ground there. So watch that one. I see the decreased position in BABA. That's interesting for Viking Capital.
Microsoft as well, too. Netflix, Facebook. So I don't know. They definitely seem to be one of the busier names out there. That's for sure.
Yeah.
And closed positions, ECA, another oil name getting dropped there, and we mentioned that Boeing. So.
Oh yeah, closed out their Boeing, huh?
Yeah.
Yeah. That kind of fits into my theory of how big money and big institutions. They try to be as risk averse as possible, or let me rephrase that. They try to avoid uncertainty to some degree. And I think with the Boeing play, Boeing had a fantastic run over the last, 2 years or so?
Yeah.
And then it broke out in January, February, and then it had those headlines with the crashes, and you could just see that, like, all right, you know what? There's too much uncertainty about where it starts to go from here. We made a good run in it. Let's close this position out. That's the way I view it. So.
Yeah.
But.
All right. Well, Scott, I think that will bring to a close this session at 13Fs.
Okay.
So, obviously, if anybody's got any questions, feel free to write in. CNC is the one name I think that I'm going to be getting long at after this discussion. So I don't know, Scott, was there anything that was jumping off the page to you that you're following up on? I know there was one that you said you were going to. I think it was CNC that you said you were going to do a little bit more.
Yeah, CNC. I wrote down. We skipped Bridgewater Associates with Raymond Dahlia. I don't know if you want to touch him.
Okay, yeah, we can take a quick
that was May 14th. The only thing I wanted to point out too is when I looked through his picks, he must be a value investor because they're all in massive downtrends.
Yeah, like looking at Ameritrade, Schwab.
Well, look at this RLGY. I mean, I don't know what's going on with that stock, but why he's increasing positions in that, I don't know what
Well, he also closed out his XFCX and GME, so I don't know if you'd view that as a value investor, right?
I mean, he's closing him out because just it's
Closed out
totally
his GIS.
closing him out as for losses.
Yeah.
He must be. I mean, I don't know. Sometimes I wonder, how these people stay. How people still giving him money. They usually have one banner year, and they get their name out there, and next thing you know, everyone in the world throws money at them, and then they just stink it up years after.
Yeah.
So
looks like he took profits in a Celgene.
yeah, I mean, he closed his position out in U.S. Steel X, another name that's just been stinking it up for the last almost 10 months. So
not to pick on it, but it increased his position in M and JWN.
yeah, that's exactly my point.
So
I'd run so far away from this guy if I had money with this fund. Oh man.
Yeah.
It's time to pack it in, Ray.
Yeah, maybe he's just having a bad quarter.
Or send some of your money to Scott Smith. Let me run it for you.
There you go.
All right, I think that's it, Gav, right?
Yeah.
Let's start this 3-day weekend.
All right. Well, hopefully we're going to be posting this shortly, so hopefully everybody got a lot of value out of it. And again, if there's any follow-up questions, please let us know on feedback.